Market standpoint, I guess two big indicators to us are what's the behavior of the real estate players and then the venture capital players. So every venture capital fund on the planet now has got a strategy around real estate, and that's pretty exciting to us. And that's fairly recent, the last kind of 6 to 9 months. And then on the real estate side, really where previously real estate players were kind of focusing on their operations, I think their minds have really opened up to how can they invest in seeing and taking part in the changes happening in their industry, and they're less interested, like the VCs, in equity returns of the startups. They're more interested in what the learnings can drive in terms of points of return in their KPIs of their portfolio.
Well, I think that one of the things we're seeing happening is an increasing focus on sort of full stack solutions. So whereas before we've had a lot of the investments and a lot of the startups have been focusing on a particular piece of the process, you now have companies like the co-living companies or the WeWorks or the Industriuses that are increasingly sort of focused on integrating these into a full stack solution. One of the things I think is interesting is that in the last several years, we've seen operating companies that are actually spending a lot of their money on real estate assets being capitalized through purely venture capital money. And I think that as this market begins to mature and people realize that it's not sort of like a software market, and that the generalist VCs see that it's not like a software market where it's winner take all, I think we're going to begin to see a divergence of investing in operating companies and then property companies that sit alongside them that will be capitalized by more traditional real estate capital as these business models are proved out.
We've had our heads down just busy executing and doing what we do. I mean, we have to obviously keep up with what's happening outside of Pi Labs and the overall market. And the market backdrop we see is one that is becoming more and more open to and conducive to new PropTech ventures and ideas emerging. So we're seeing a lot more liquidity coming to the space from across Europe, many new investors keen to be investing in our companies. So really we've seen that PropTech is growing and maturing as an asset class. And for us, as one of the first to get into the space, it's extremely gratifying to see how much interest there is from across the ecosystem, because that only benefits us and benefits our portfolio companies.
So I think one of the interesting things is that we have a lot of companies that are using words like machine learning, big data, AI, and a lot of those companies are actually providing valuable solutions, but widespread adoption of them has yet to really happen. And they have yet to really achieve the sizable data sets and reps necessary for these models to learn and for them to be actually applied on a wide basis. So one of the things I think we're going to see happening is several of those models beginning to really start to scale and to be used at scale, and then they will attract significant investment because much like with Google, as it acquires more data and is able to be more, gets more repetitions, its platform will become more valuable. In real estate, that's often hard because real estate transactions are infrequent, complex, and large, whereas online transactions are frequent, simple, and small. So it's going to take a while for that to build, but I think that we're getting to the point where there's enough data, enough reps, and enough sort of longitudinal patterns that it's going to be valuable enough to be adopted by traditional investors. So the thing I'm most excited about, and this will be no secret to anybody who's followed me online, is the changes in mobility and the way that they're going to impact real estate. So from time immemorial, real estate has been defined by its proximity to transportation. Location is all about location relative to transportation. So whether that's a city on a river, a city built by the train tracks, or its accessibility via roadways, that's really what drives value. We have a revolution happening in mobility. It's starting right now with micromobility. It will accelerate with autonomy. That's going to impact the way both things and people move through cities and through buildings. And I think that's going to be one of the most revolutionary things, not to just happen in prop tech, but to happen in real estate in more than a century.
What do we see happening in the future? So tons of stuff, but I'll pick out a couple of them. the tenant engagement spot is white hot, right? We've seen it explode in the office sector, and I'm really happy about this just personally, originally as user experience designer, to see companies going all the way to the end user and asking them how happy they are and what they want and what makes things easier for them. I feel very good about that, it's kind of, you can't avoid it in office now, and we're starting to see it take off in residential, retail, industrial logistics, and everything. And I guess the other one that our company District is one of the leaders in that space, and we really like what they're doing. And the other one I would say is sustainability. So we think there's really a growing recognition of the value of creating sustainable businesses. Real estate has been on this track for some time, and we're really starting to see that move beyond the either purely good feeling or purely energy returns perspective, and driving more of a social responsibility. And I think real estate companies are starting to see that ROI deliver in their portfolio. And so our investment in Measurable, we're super excited about, because they're able to provide not so much opinions, but more data against the performance of an asset manager's portfolio, benchmarked against other buildings of similar types. And that we are pretty excited about as well.
I think what you're going to find is that there have been a lot of early stage financings in PropTech at the pre-seed and seed stages, and you're seeing a couple of strong companies go and raise their A rounds in the last 6 to 12 months. I think what's going to happen in the next 12 is you'll see really a separation of quality between those companies that can go on and grow to the next level and attract the interest from Series A investors, and those that may not really make it. And what I also hope to see is, as the sector matures, that more companies go on to raise Series B rounds as well, which really is the point at which they can scale up their operations with a large equity injection.